The Philippines is blessed with an extraordinary amount of untapped energy resources. Resources so valuable, they are often likened to a hidden mountain of gold. These reserves lie within the nation's 200 nautical mile exclusive economic zone, EEZ, an area that holds the key to transforming the country's future. Beneath the surface of this vast maritime territory are vast hydrocarbon deposits, specifically oil and natural gas, that remain largely undeveloped due to a mix of geopolitical tensions, policy setbacks, and infrastructure gaps. According to combined research from the United States Geological Survey, USGS, and China's Ministry of Geology and Mineral Resources, the Spratly Islands, an area at the heart of multiple international disputes, may hold as much as 17.1 billion barrels of crude oil. Recent explorations in the Sulu Sea, especially near the Celebes Sea, suggest the actual value of the country's total hydrocarbon deposits could exceed $6.3 trillion. To put that in perspective, these reserves surpass Kuwait's entire oil holdings of around 13 billion barrels, even though Kuwait is recognized globally as one of the top oil producers. This paints a compelling picture. The Philippines is sitting on a potential energy empire, yet this fortune remains largely inaccessible and undeveloped. Expanding the context further, the U.S. Energy Information Administration has estimated that the broader South China Sea could contain approximately 190 trillion cubic feet of natural gas and about 11 billion barrels of proven and probable oil. Interestingly, most of these resources are believed to be located around the continental shelves and margins of the sea, rather than directly under the islands and reefs that are hotly contested. In 2012, another assessment by the USGS projected an additional 160 trillion cubic feet of gas and 12 billion barrels of undiscovered oil still waiting to be tapped beneath the same waters. Beijing, on the other hand, has presented even more optimistic estimates about the reserves under the South China Sea. However, even China's projections, although larger, still appear modest when weighed against its enormous domestic energy needs. In 2018, for example, China's daily oil consumption was expected to reach 12.8 million barrels. This underscores the intense competition for energy security that now defines geopolitical maneuvering in this part of the world. A Washington-based think tank, the Asia Maritime Transparency Initiative, recently revealed that several countries are currently pushing forward with oil and gas development projects in areas of the South China Sea that are still under dispute. These areas, claimed by multiple countries including the Philippines, Vietnam, China, Malaysia, and Indonesia, are now witnessing a fresh wave of exploration and activity. From 2018 through 2025, a series of maritime confrontations have occurred between these Southeast Asian nations and China, largely due to ongoing drilling operations and surveys. The think tank warned that further incidents may be inevitable, especially as countries, excluding the Philippines, proceed with projects in regions that Beijing considers part of its 9-line claim. This controversial maritime boundary cuts across the South China Sea and encompasses areas claimed by several other nations under international law. Reports show that many of these offshore projects overlap with sites of previous diplomatic or military clashes. As the Chinese Coast Guard increases its presence and patrols in disputed waters, the likelihood of new confrontations has only grown. China, Vietnam, Malaysia, and Indonesia have all pushed forward with their energy development programs, while the Philippines, under a policy established in 2014, has continued to suspend all exploration activities in contested areas, effectively falling behind. This self-imposed halt on exploration has become a point of concern, especially given that the country is not lacking in energy potential, but is restrained by legal and security dilemmas. In a significant development, the United States in 2024 publicly expressed interest in the Philippines' multi-trillion-dollar oil and gas sector. Discussions are now in progress regarding possible joint exploration initiatives within Philippine territorial waters in the South China Sea. Companies in the Philippines, already holding licenses to operate in these resource-rich areas, are actively searching for American partners to help them fund and execute these ambitious ventures. The urgency is growing. Energy prices in the Philippines are not only vulnerable to global price shifts, but are also under domestic pressure due to the projected depletion of the Malampaya gas field. Located off the coast of Palawan, this field is currently the only substantial local source of natural gas and supplies about 40% of the power requirements for Metro Manila and other parts of Luzon. Experts forecast that it will be completely exhausted by 2027. If this timeline holds true, the country will face a major energy shortfall unless alternative sources are secured quickly. Because of this risk, the Philippine government and private sector are seeking to attract up to $100 billion in foreign energy investments over the next decade. In particular, US and Japanese investors, many of whom are reconsidering their presence in China due to rising political instability, represent prime targets for this strategy. Strengthening economic and political ties with the United States and Japan could dramatically improve the Philippines' reputation as an energy investment hub in Asia. The United States has started adopting an industrial policy aimed at supporting the development of the Philippines' energy industry, recognizing its vast reserves as a strategic resource. These untapped deposits, which are potentially worth trillions of dollars, have attracted significant attention from global powers, not just for their economic value, but also for the geopolitical influence they offer. China, however, has been vocal in its opposition to growing ties between the Philippines and the US, particularly in the area of defense cooperation. Beijing has labeled the United States as a disruptive force to regional peace and stability, especially after President Ferdinand Marcos Jr. expanded U.S. military access to Philippine bases through the 2014 Enhanced Defense Cooperation Agreement (EDCA). This development added further tension to the already complex relationship between China and the Philippines. To address the increasing risks posed by Chinese aggression in the West Philippine Sea, analysts have advised the Philippine government to organize joint naval patrols with the U.S. and strengthen its maritime defenses, especially around energy-rich areas like the Reed Bank. The urgency of this recommendation stems from a worsening energy crisis and the impending depletion of the Malampaya gas field. These two issues, rising fuel costs and diminishing domestic gas reserves, have pushed national leaders to reconsider long-stalled exploration plans. According to recent research, the Philippines is currently the only claimant nation in the South China Sea that is not actively developing energy resources within its own continental shelf, particularly in the areas encroached upon by China's 9-line claim. This hesitancy has delayed the realization of energy independence, leaving the nation dependent on imports and at the mercy of volatile global markets. While most of its neighbors have grown their economies around oil and gas, the Philippines remains an exception in Southeast Asia. Countries like Indonesia, Malaysia, and Thailand have all used their energy reserves to support rapid development and create revenue streams for infrastructure and social programs. Even Vietnam, despite frequent diplomatic tensions with China, has maintained its ability to push forward with energy exploration without surrendering its maritime claims. The Philippines, in contrast, has never fully capitalized on its own vast oil and gas potential. Nonetheless, surveys suggest the country holds over $26.3 trillion in oil deposits beneath its exclusive economic zone, most notably in the Reed Bank and Mischief Reef. Should these estimates be correct and commercial production commence, the Philippines would no longer need to import costly petroleum. Instead, it would join the ranks of oil-exporting nations, stabilizing its domestic fuel supply and shielding its economy from international market disruptions. The economic impact of such a shift would be monumental. According to data from the Philippine Statistics Authority, The oil sector has contributed only 0.19% to GDP for the past 2 decades. This is a strikingly low figure, especially when considering the sector's importance in setting energy prices, influencing manufacturing costs, and driving inflation. If production starts and follows regional benchmarks, the GDP contribution from oil and gas could rise significantly. For context, Indonesia, the region's largest oil producer, generated roughly 743,000 barrels per day in 2020. This output generated about $140 billion in revenue, equal to roughly 12% of its national economy. If the Philippines could match or slightly exceed this performance, it could add at least $150 billion annually to its economy, elevating it to the second largest economy in Southeast Asia and surpassing Thailand. The benefits of locally sourced oil go beyond energy independence. Reduced production costs, thanks to cheaper domestic fuel, would enable Philippine manufacturers to compete more effectively in the global market. At present, countries like Vietnam and Indonesia are seen as low-cost manufacturing hubs. But if the Philippines could offer lower energy prices and enhanced industrial capacity, it would become an attractive alternative for foreign companies seeking new manufacturing bases in Asia. Such a transformation would also bring down logistics and transportation expenses. Local fuel production eliminates the need for expensive imports, which means lower prices at the pump and cheaper freight services. These reductions would ripple through the entire supply chain, reducing the cost of transporting agricultural and processed goods, as well as other basic commodities. When essential goods become more affordable and household incomes stay constant, people are able to buy more with the same amount of money. This creates higher disposable income, which strengthens consumer demand, the primary driver of the Philippine economy. With consumer spending accounting for about 70% of national economic activity, lowering energy and commodity costs could stimulate widespread domestic growth. This positive feedback loop would ultimately promote a healthier and more resilient economy. To unlock the Philippines' oil and gas potential, a clear, long-term energy roadmap is crucial. While the country's natural resources present immense opportunities, a lack of consistent investment and long-term planning has hindered their development. The roadmap must outline not just the immediate steps for exploration, but also the infrastructure and policies needed to ensure sustainable and efficient production. One of the most significant barriers to tapping into the Philippines' oil and gas resources is underinvestment in exploration. Despite the vast potential, the exploration of new oil fields has not kept pace with demand. Oil exploration requires high upfront capital, long-term commitment, and a favorable regulatory environment. Unfortunately, inconsistent government policies, a lack of infrastructure, and global market uncertainties have led to a hesitancy among investors. The country's energy needs are growing, and without significant new exploration, the gap between supply and demand will continue to widen. For the Philippines to reduce its reliance on foreign oil, it must prioritize exploration and provide incentives for both local and foreign investors to venture into these underexplored fields. An attractive fiscal regime, clear regulations, and access to the latest exploration technologies will be essential to lure these investors. However, the technical and financial challenges are only part of the equation. The key to unlocking the oil and gas sector lies in political will and policy reform. Governments, past and present, have struggled with inconsistent energy policies that fail to align with the long-term needs of the country. From regulatory hurdles to shifting priorities based on political cycles, these inconsistencies have discouraged investment in the oil and gas industry. For the sector to thrive, the Philippines needs a stable and clear policy framework that fosters growth. This includes better management of existing resources, simplified exploration and drilling permits, and creating a competitive environment for energy firms. It also means addressing issues like corruption and bureaucratic red tape that slow down development projects. Unlocking the Philippines' energy potential requires collaboration among various stakeholders. The government, private sector, and local communities must work together to create a supportive environment for exploration, development, and production. Partnerships between the government and private investors are vital to making the country's energy resources competitive on the global stage. International energy companies with expertise in exploration and production can offer the technology and knowledge necessary to optimize oil and gas extraction. In return, the government can offer favorable terms that ensure the country's long-term energy security. By incentivizing private sector involvement while also focusing on local workforce development, the Philippines can create a sustainable energy sector that benefits the entire population. While unlocking new reserves is important, the country must also focus on the long-term sustainability of its energy resources. Over-reliance on fossil fuels can have negative environmental impacts and may not be a viable solution in the years to come as global energy transitions towards greener sources. To ensure energy security, the Philippines must adopt a diversified energy strategy that incorporates renewables, energy efficiency measures, and a balanced approach to oil and gas development. The government should look at creating a sustainable energy future while still taking advantage of the economic opportunities that come with oil and gas production.